Hello everybody, my name is Allocation and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. Since I am doing all these videos about investing, I thought I should do a video about some of the technical terms that I may be using in some of the videos, just so you would be familiar with them. They should be fairly easy to pick up. Let's start with stocks or shares or equity. They all mean the same thing. It's ownership in a company, and it may pay a dividend back to the investor from its profits. Next is a bond, which is a loan to a government entity or a company, and it pays interest. Asset allocation is how a portfolio is divided between stocks, bonds, and other assets, as well as the type of stock. The most important factor in portfolio return is the asset allocation as far as where you put the money. Then there is the index. It's a representation of a stock exchange. So for example, the S&P 500 index represents New York, or the TSX represents the Toronto Stock Exchange. This is what the newspaper or TV is referring to when it says the TSX was down today. It's used as a benchmark for other vehicles and to represent the market. A mutual fund is a basket of investments, whether stocks, bonds, real estate, gold, cash. Very many different things could be inside a mutual fund. A balanced mutual fund is a mutual fund that has stocks and bonds. A mutual fund will have a management expense ratio. This is a percentage of assets the owner pays for owning the mutual funds or exchange traded funds to the company that administers that mutual fund or the ETF. You will never see the MER be deducted from your asset. It will just go away behind the scenes. Next, we have an actively managed or passively managed mutual fund or ETF. Actively managed means a human makes decisions about what assets to include in that basket. Passively managed means the assets are mechanically chosen by a formula. So for example, it could follow an index. It could be stocks in a given sector. It could be a company that's at least X in size and made a profit in the last 2 quarters. And there's very many different types of passively managed ETFs or mutual funds, such as Clean Water ETF. Next, we'll talk about some overall market trends. So a correction is when a stock market has gone down 10% or more from a recent top. A bear market is a downtrending stock market, coming from the words bear down, and this is where the market is down 20% from a recent top. A bull market, on the other hand, is up trading stock market, up 20% from a recent bottom. And a recession is where the gross domestic product has decreased 2 quarters in a row. A depression is where the gross domestic product is down more than 10% from the last high, or it's a recession that lasts more than 2 years. The last depression we had was in the 1930s. Another technical term is brokerage. This is a place, usually online, where you can transact stocks, bonds, and other assets. Next, we'll look at capitalization, which indicates the size of a company, measured by multiplying the price per share by the number of shares that company has out. So a micro will have a capitalization of under 100 million. A small company will be 100 million to maybe 2 billion. Medium will be 2 billion to 10 billion. Large will be 10 to 20 billion. And a giant will be over 20 billion. And keep in mind that there's a few companies that are over $1 trillion in market capitalization. I hope those terms will help you navigate both my videos and the market a little bit better. Let me know if there's any other terms you'd like me to define, or if you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.